recording button there. Welcome everyone. Thank you for joining this webinar, and I'll just have give me a second, the page on our webinar. Now, today's webinar is trading commodity currencies, and the main focus is on NZD crosses, because we've got a couple of economic data releases. I've also noticed that we've got quite a big flush of liquidity in both the main sessions as well as the earlier Asian sessions for commodity currencies, and hence the reason I thought it would probably be good for us to find trading opportunities on NZD crosses. But it does not mean that we will only look at NZD for crosses only. But if you guys have got questions on the currencies that you guys are trading, by all means, you can always ask. Okay, so don't worry about that. The other thing as well is, as of now, as of the earlier sessions, especially the GBP sessions and all that, I've noticed we have got very strong trend, especially on the bearish side, on all three commodity currencies, including the NZD, the AUD, and the CAD. So all CAD crosses, AUD crosses, NZD crosses might be giving us a lot of trade setups, especially patterns, formations as well, price action, bouncing up and down from the significant support, resistance, and various others. So what this means is that we have got good trading opportunities on these commodity currencies as well as JPY crosses. Why? Because today is Thursday as well, and Thursday we have got good returns usually from JPY crosses, or the yen crosses, especially Euro JPY has got its highest average movement per pip on Thursdays, and then you have got about 6 to 7 correlated pairs that are correlated, whether positively or negatively, with the Euro JPY. So we've got loads of trading opportunities, and we didn't really have a very busy docket today with regards to data releases on the economic calendar, but we have got lots of volatility driven by various factors. Okay, so with that, let us just proceed to the chart. Now, let me just remind you, today is the 30th of July 2020. Today is the Thursday's webinar. We have webinars every day. Sort of the same time, Mondays to Wednesdays. Mondays and Tuesdays. I have it on 4 o'clock, usually 4 o'clock Cyprus time is GMT +3, and then from Wednesdays to Friday it is usually at about 3 o'clock Cyprus time. Okay, so there you go. You've got webinars, and also, you guys who are attending the webinar, if you guys have got suggestions on the webinar topics, just let me know, and I'll be happy to help to have a webinar done. Testing 1 2 3. Testing 1 2 3. You cannot hear me. Okay. Can you guys hear me? Because I think the rest could actually hear. Michael, I'm not sure. Let me just make sure. Testing 1 2 3. I think. Yeah, I think we are all up and running. Yeah, it's clear. Okay, so I think Michael, check your end, please. The rest. Okay, good. Brilliant. Okay, good. So we've got confirmation that you guys can hear me. So I guess it's Michael's end. So I'm just typing that to Michael to let him know. Okay, good, guys. All right. So shall we then go ahead and look at our first NZD cross and look for opportunities, look at trading setups from various angles as well. That's good. Okay, good. So most of you guys can hear me. That's great. Thank you so much. Okay, so let us start with because today's topic is on NZD crosses, trading NZD crosses. Now, earlier today, we have had the, on the economic calendar, we have, I think it's just one or two what do you call that, data releases that concerns NZD USD. But then it didn't really impacted it a lot, even though it was positive. But you see what's happening now with NZD, the AUD, as well as the CAD, is that all these three commodity currencies are running really, really bearish at this moment of time. Okay, so in terms of trend, you guys know that, okay, you've got a bias to the downside on it, but we want to also be sure on the setup. That means where are the locations of our trading opportunities, and whether or not we are evaluating the market or evaluating that particular currency pair based on several criteria. So these are the most important thing. Okay, so I'm going to show you a couple of things. Firstly, what I usually do is I would like to also look at a pair on the long run first. I like to go onto the daily chart as well, just to give me a little bit of an idea. I usually compare the 1 hour, the 4 hour, and the daily chart. So here I apply the 3 EMAs that I've been applying for the past 8 over years, and I never take these indicators off. These are the three blue and white blue lines, and the white ones here are the EMA lines. Okay, so they are exponential moving averages, 50, 100, and 200. Okay, so what I usually want to do is to look at how the cluster of candles are moving. As you guys know, if you're moving to the upside, you've got ABCD to the upside, then you are looking at the favor. The favor is to the upside. Okay, this is on the long term, or generically the NZD USD is thought to have some bullish sort of momentum in the long run following the daily chart. But if we go onto the weekly chart as well, you could see that that's not really quite the picture, only because you have got all these candles sort of trading in between the three lines, which are usually very, very risky. Okay, why? Because when the candles are going up, they may actually find resistance at any one of these three lines that I show you here, whether it's the EMA 50, the 100, or 200. So as you can see here, market went up, found resistance here at the one of the EMA, which is the 100 EMA, came down and then went back up again twice and hit the EMA again. And this one didn't quite hit, but was quite close to that 50 EMA. But again, this one went up there close to it. You know, the closing price right there as well. The opening price of that bearish candle caught up with the 100 EMA and then back down again, and now it's approaching the 200. So that's what's happening on the weekly chart, and this is what happens as well in most currencies, whereby you can find the candles or the price finding support or resistance in any one of these three lines. Okay, you guys got the idea, yeah? So here, for example, with what I can actually see, we have got GBP as of now really, really very bullish, but then you have got, as I've mentioned earlier on, CAD, AUD, and NZD really, really bearish. Okay, so whether they are, if I look into NZD in particular, now NZD is a very unique type pair. When we're trading NZD, we have to also, oops, sorry. Give me a second. So basically, when we are looking at NZD, we need to also look at AUD, because NZD usually behaves like the little brother or little sister following, you know, a bigger person, and that bigger person is the AUD. So wherever AUD goes, NZD will actually follow sooner or later. So hence the reason we are finding AUD to be really, really bearish, and that goes the same with the NZD. So and NZD at this moment of time is in particularly bearish against the JPY, against the GBP, and the CHF. So this is also very, very unique. We've got a commodity currency moving very bearishly against safe havens, especially the CHF and JPY, but also USD, because USD is also categorized as a safe haven. Okay, so we have got NZD. If we are pairing up NZD, we can pair up NZD with JPY, GBP, and CHF, but then we want to look at how the trend fares. So the first thing is to do a trend analysis. Okay, so here we are doing a trend analysis for NZD USD. You can see that, you know, in the long term, okay, we've got that uptrend bias going on for the NZD USD. But then here, for example, we could see that it may actually be looking at some correction level here, but then it has actually entered into the zone of the three EMAs, which actually means that, you know, it's starting to be a little uncertain. We're not really sure of that uptrend at this moment of time, because it's correcting, and how far will it actually correct, we don't really know as yet. Then as we go on to the 1 hour chart, you could see that we have got the same thing going on. You've got the three lines going sideways. They're not really going up all the way or down all the way. So this one here is giving us a little bit of a hint that NZD USD on the 1 hour chart may be a little uncertain at this moment of time. Even though we're looking at a lot of bearishness going on for the NZD USD, but when we want to actually confirm and look into what is really going on with the NZD USD, we're getting a little bit more non-clarity of the trend at this moment of time. So do I actually look into opportunity to actually sell or buy at this moment of time? Not for NZD USD, perhaps for the, okay, give me a second. So perhaps, you know, it's going to be better on the other currency pairs. Okay, let me just do that here. Oh, sorry. Okay, give me a second. All right, so here, for example, we are looking into GBP NZD as our next, because I traded GBP NZD earlier on Errante's live account, and you know, I got a couple of pips right there, made some I think about 70 euros or something like that, and I was just trading on the upside. Now the reason I traded on the upside for a very short period of time as well is that firstly I found that the GBP NZD seemed to be quite bullish at the time. Okay, I started off with the 1 hour chart, and then I moved on to the 1 hour as well as a 4 hour chart. Now, this is what I would actually sample as a good bullish movement, when you see that all the three lines are like a river flow to the upside, and then you want all the majority of the candles to be above all the three lines as well. Okay, so when you get that kind of movement, this is giving us a very good bullish sentiment. So it is quite bullish, but then we have to compare it with the other 2 or 3 time frames. So then I take it one time frame higher, which is the 1 hour chart, and I still see the same sort of movement, but then it goes even higher. That actually means that it's got this bullish momentum coming in, which is a very good sign if we are on the buy side. Then we compare it with a 4 hour chart, and I still see the same thing with the candles only, but not really with the three lines. Okay, the three lines started to weaken a little bit, meaning that they started to go sideways. So what that actually means is that you need to be careful. It doesn't mean that you cannot go and enter into a buy if you see lines are not going up anymore, the three EMA lines. It's just that it's maybe it's approaching some correction area. Okay, so here, for example, when I go onto the 4 hour chart and I look to my left, definitely there are chances of correction, mainly if you see that you have got resistance here as well. Okay, and then when you look to the, after looking to the left, you go to the right and you look into the current price is trading at 9638. Now 38, if it reaches 40, 41 and above, it would then bump into the 1.9650 psychological number. So it's probably best for us to just lay out that line, that price onto on 9650. Okay, and this is just to give us a bit of an indication that this is where price could potentially reverse. So it could actually reverse anywhere between now until 9660 area, because you want to give a 10 pips gap to the upside, 10 pips gap to the downside, and anywhere between that 20 pips window, it could potentially reverse, and that's usually what happens in all these areas as well. Okay, so here, for example, it wouldn't be an area for us to buy at this moment of time, even if you think that GBP and NZD has got a good run to the upside. Yes, definitely. But what I would like to do is to actually catch it on its buy at the right time, at the right location. Okay, this is the most important thing. Is it the right time? And it is it in the right location to actually buy? We need to really be careful. Okay, because anything could drive the price lower and much lower. That means to actually go opposite your direction. So we want to actually find out whether or not we are at the right location to buy. Now, firstly, what we need to know is whether or not the current trend, which is to the upside, is strong. Now, here you can see that whole movement uptrend. It's on a 4-hour chart. Then you want to look at the ADX. ADX stands for the Average Directional Movement Index. You don't need to change any parameters, just as it is on default. And you want to look at the blue line. Okay, so if this is an uptrend, whether it's an uptrend or a downtrend, you just need to look at the blue line of whether or not the blue line is above the level 25. Okay, you need to insert the level 25 on it. And if you see that the blue line is above 25, that means that trend that you're looking at is quite strong. Okay, that means you don't need to wait any longer. It's probably quite good. So if we go into the 1-hour chart, you could see that it is really very strong. So that's a good sign. And then you go on to the daily chart, you can see that the uptrend is really still very strong, which is good. So I'll get rid of this one here. Okay. And what I will then look next is that I know now that I have got a chance. I've got a buying opportunity for the GBP and ZD. Okay. But I just want to know that I need to probably enter the market for a buy, not now, but after price has gone above the 1.9650, at least by 10 pips. So my entry price for a buy would probably be only at 96.60. Okay, so I want to lay out that price at 96.60, for example. So I have got 96.60. Okay. And we've got it right there, 96.60. And once we have actually minimized that, we can then see the big picture a little bit, but we need to go on to the daily chart as well, just to see what's going on with that level that I have thought to buy. I would probably be interested in buying the GBP and ZD, knowing that I've got a strong trend. I've got, trend compared across 3-4 time frames, and it's looking quite good on the buy side. Now, what I need to do next is, if I were to enter at 96.60 and above, do I actually have, I try to do that on a daily chart, you can do that on a 4-hour chart as well, is to look for bearish, single bearish mother candles to the left, because we want to know whether or not the location above the 96.60, was it actually backed up by single bullish candles in the past? Now, the answer to that is yes, you have got one right there. Now, that single bullish candle itself started the opening price at 96.77, okay, roughly. But then it lasted as long as that body of the candle for 275 pips. So that actually means in the past, the location within this range from the start of the candle, which was at 96.77, to the closing of the candle, did actually exist with some buying opportunity, and the closing price of that single bullish candle right there, maybe you guys can see that clearer now. Okay, that candle right there, because that's the most recent one. Okay, so if I were just to move at the opening price, that opening price was at 96.74, let's say, and the closing price of that single bearish candle right there was at 99.50, which was exactly at the psychological level. And that psychological level right there mirrored a previous resistance as well, as you can see, which actually brought price down from that area to there, at least about 638 pips. Okay, so this is quite a significant area. Now I found the location of where I could potentially buy. That is a location of a buying zone. That is a potential buying zone, mainly because we have had a single bearish candle in the past. Now, if we find many more bullish, not bearish, bullish candles, then we are in a very good position to actually consider buying in that area. Okay, so here you can see that you have got bullish candle, but broken up into two bullish candles right there. But I'm looking for a single bullish candle as well. So on a daily chart, it's usually quite powerful. We have had a single bearish candle going through that area, which is a very good sign. That means it is actually a very significant area to trade. We have got several other bullish candles. I'm more interested in looking at a single bullish candle, okay, in that area, or trading in within that area. This is we've got something there, but it didn't really quite reach that end there with a single bullish move, but we have got one right here. Okay, so this is your second candle right here. So this is a very good sign, giving us the idea that there is definitely this was about 320 plus pips on a daily chart. So now we have got a bit of an idea that yes, and there's another one there as well, single, and another one right there. So this is a very good area to actually buy. This is what I meant by location on the GBP NZD. Then what we want to do next is then to move to the lower time frame. And as we move to the lower time frame, like the 4-hour chart, we want to look at the same area, and we want to look at what has happened in the past in the same area when we actually look to the left. Now we have had in the we have had that move down. Yes. Do we get any bullish candle as well? Bullish movement. We've got some bearish. We've got a bullish movement right there. But the whole candle, that bullishness actually appeared in the middle. Okay, we've got one in the middle. Not too bad, but I want to mark it differently. Okay. See, we've got a choice now whether to follow the movement location of the daily chart or now the 4-hour chart. So you've got long term, now you've got the medium term as well. So for those who wants to actually enter medium term, they don't want to leave their trade open too much, you can then look at your location would be based on the yellow area, the area that's been marked by the yellow lines. Those who want to go longer term, you've got a bigger area, which starts, I'll take that one out as well. You've got the red area right there. Okay, now we'll move on to the shorter area, and that is no, on the 1-hour chart, let's say shorter term. Okay, so then we bring this one down a little bit. Okay, and we move on and we look at all these areas right there. And we look for any potential single bullish candles as well. Okay, so here, for example, we don't really have much of the bullish candle movement in within that area. Let's just check. We've got some short-term one here starting at the red area, but the distance between the current price now and the area that we may actually enter our trade is only about 30 pips distance. So it's not a long wait for us to consider, starting to buy at the 96.73 area, but it's not a good area to actually buy. So it's probably better if we adjust our buying price based on psychological number at 96.90 instead. Or if you want to be a little bit more conservative, then you can actually look into the 97.10. So I'll just put it as 96.90. Okay, 96.90. This is for GBP NZD on the 1-hour chart right now, and we're moving on. We're looking into all these potential area that has got a bullish single candle. We might not be looking at it so much, but then we can actually see that you have got a bullish candle all the way up right here, but then half of it has already been visited by the current price now. So then if we look into this bullish candle right here, the current price is on this bullish candle, as you can see. That actually means if it were to decide to go up, then it would probably ride along that candle for another 76, 78 pips or so. So yes, you have some bullish momentum as well. So in other words, if I were to actually look into buying, my buying price would be at 96.60 instead, because the current price is at 96.45, which is very close to 96.50 psychological number. So let me mark the buying price right there. Okay. I'll get rid of this one here, because we don't need that. Okay, we can enter, our buy earlier based on that single candle right there for GBP and ZD on a 1 hour chart. So 96.60. Okay, so you got your 96.60 right there. 96.60. So this is where you could roughly look into your buy sort of price. But the challenge is, is this resistance area right here, which is not very far away, only about 16 pips or so, because this is where you want to also look into drawing your resistance line and things like that. So for me personally, if I were to trade the GBP and ZD to be at a safer area, I would probably prefer to trade above the yellow line and do a pending order at 1.9710. Okay, and if I do a pending order for a buy at 1.97, 10, then I would actually follow the the 4-hour chart yellow line right there, and look into the 99 maybe 9890 area to actually exit. Okay, so for me it is still a bit too early, but then I can easily place a pending order first for buying the GBP and ZD. All right, guys, for the rest of you guys who've just entered the room, welcome, guys. You are at the right place. We are talking about NZD crosses today and trading opportunities for buying some of the NZD crosses, also for selling opportunities as well for some NZD crosses. Okay, so we've been talking about AUD crosses yesterday, but then more NZD crosses today. Okay, guys. How are you guys doing? Oh, good to see all the familiar faces today. Thank you for attending my webinar. Very good. So we have got a bit of a buying sort of opportunity for GBP NZD. Okay, so let me just read you guys the prices that I'm thinking of buying. There is a short-term type price at 1.9660 for GBP NZD. Okay, short one, basically to take a buy, you can buy at 1.9660 and take profit at 1.9690. Okay, so between that 1.9660 and 1.9690 is a 30 pips profit potential. So if you are using the stop loss at 1-to-1 ratio, that means that your gap between entry price and stop loss is the same as the gap between entry and take profit. So because it is 30 pips on the upside, so it would be 30 pips on the downside for your stop loss. So your stop loss will be 1.9660 minus 30 pips, which gives you 1.9630 as your stop loss. Okay, you guys got that? Yeah. So that's your short-term type trade. Trade idea for GBP and ZD. Main reason is we're seeing a lot of bullishness for the GBP and a lot of bearishness for the NZD. So I have mentioned it to the rest of the guys today that as of today, earlier sessions in London and all that, when London opened, from London Open, European Open until now, we are seeing a lot of bearishness on commodity currencies. The 3 commodity currencies that are very, very weak as of today, that means very, very bearish, are the NZD, the AUD, and the Canadian dollar. Okay, so these are very, very weak pairs. Of course, the Canadian dollar have been driven by falling oil prices as well, okay, because they are correlated. And then we have got things happening in Australia as well, not very good with COVID, with economy, with a couple of other things that are impacted by the economy. We've got several other cities in Australia that will be locked down over the weekend as well. And because of that, New Zealand dollar is always acting like the little brother of Australian dollar. So that actually means that the NZD will follow through the bearishness of the Australian dollar. So I hope that makes sense. So we are still seeing a lot of bearishness, as I've mentioned, on these pairs. So we are concentrating on the topic of NZD crosses. So out of all these crosses that I have here laid out for you, I find that we have got some GBP NZD buying opportunities, not just now, but at 96.60. Now, the reason why you're looking at 1 hour chart and then a little bit of a correction right here is because of the psychological level. The see where it actually reversed was exactly 2 pips behind the psychological level of 1.9650. It reversed at 96.48. 48 is only 2 pips away, and that's the reason why I have not planned the buy very close to that area, at least 10 pips above the 50 psychological level, mainly for this reason, because of that correction. The correction, we never know how far off. What if it actually falls and falls hundreds of pips down, just, you know, because driven by something political, economical, geopolitical, or anything else, let's say, for example, then your entry wouldn't have been touched. You see, your entry wouldn't have been touched. So you can then either adjust it, make it lower for the sell entry instead, or you want to actually cancel the order. You can do anything after that. So at least you are not being impacted or affected by that movement. Okay, so anything can happen. It could actually bounce back up and then trigger that as well. So hence the reason, you know, if we are trading, we want to also look at the trend. Yes, the trend is strong, but don't get overly excited in aiming big. We don't want to aim too big, 100 pips buy on the GBP and ZD and all that. We want to test the market first. So a good amount of pips to test the market and the market's trend strength is to actually go for about 30 pips, you know, 20 pips first, 30 pips, just to start the engines first. As you actually get more confidence of the market's trend, then you can actually up the game a little bit, increase your lot sizes as well, and also increase your target profit level. Okay, from 30 pips, maybe 50 pips that time. But by then, the market would already be more mature, more ripe for the trend. Okay, at this moment of time, it is, you see, as you can see, you know, it needs to always correct to actually gain momentum again. It's like a springboard, like a flight of stairs. You know, the flight of stairs that are going up can only go up with a little bit of downward movement as well. Then it makes the stairs. If not, it wouldn't make the stair up without the downward movement. Correct? So it's the same with what's going on with GBP and ZD as well. So here in terms of trend, it looks very clear on GBP and ZD to the upside, because as you can see, 1 hour chart, 4 hour chart looking quite, what do you call that, clear to the upside. But I can also share a little bit of why there may be a technical reason of a correction or not. Okay, so we can actually use stochastics. Now, the way I use stochastic is quite different from how the other people are using stochastics. I like to have the default parameter. I don't change anything. I just leave it as it is, and I click on OK, and I look at whether or not we have divergence. Now let me confirm what that means. Okay, give me a second. On the 1 hour chart, for example, I will just guide you through. Now you can see there's a high here. Okay, right? And there's another high right here, okay? And the current price is there. Now, if you match that movement down to the stochastic, this is the high for that high, right? And this one here, where the almost current price, let's say the high point, which is around here. Now, if you connect the two, you get a straight line, same level, but here you get a higher high, right? Okay, so the price, higher high, and then this is flat line, does not match. If it does not match, that actually means that it has a divergence. That means it's diverted. There is a mismatch between the price and the stochastic. What that means is that because this is an uptrend, okay, this is an uptrend, very clear uptrend, right? Okay, clear uptrend, because you've got all these candles above all three lines. Talking about the 1 hour chart first. Now, what that means is that if you've got an uptrend and then you've got a divergence, a mismatch between the price, you see the slope up, and then this is a sideways slope, okay? That means that we are expecting a fall of price. Okay, so this is what divergence means. So whether there will be a fall or not, we don't really know 100%, but usually about 70+% of the time, if you have a divergence, then the price would most probably reverse. Okay, so hence the reason we're seeing a possibility of a reversal right here. Now, the other question, if it does actually reverse and we have divergence signaling a potential reversal of the trend at the 1 hour chart, how far can that candle reverse to? Now, it's a very good question, but there is a very simple way of knowing this. How much can it reverse? Okay. Either Donatus, you're right? All good? Okay. So there's a very simple way of knowing how far it can. You know, a lot of people use a Fibonacci, use a lot of things, but you can actually just use the idea of looking for a single bearish candle, because this is a bearish movement coming down. We want to look to the left and basically look at whether or not we have got a single bearish candle from where the current price is. So the current price that is actually, it's trading at roughly 1.9629 at this moment of time. And that fall may actually mirror a single bearish candle of the past, okay? We've got a single longer one down here, but that one is further down, right? But we've got one coming up very soon. That single candle is only about 40 pips or so, right? But it's not, that current price hasn't touched that single candle yet. So it may be mirroring another single candle that we have not found yet. So we need to find that bearish candle, bearish single mother candle, okay, to actually look at whether or not the current price may be wanting to mirror that move. Okay, so see that current price is down here. Let me just check. You need to take your time in this one here. You've got a single bearish candle, which is quite long right here, okay? And this is quite a good one because here you have got support found here, and you've got quite a bullish movement right there, which is almost the same area as where the what do you call that? The bearish candle, mother candle has actually closed, okay? So if I measure from current price down to this area here, that's 28 pips. So that actually gives me an idea that if you want to sell, you can actually sell for another 28 pips or so, just to be safe. You don't want to sell and get too excited as well, because this may actually mirror the current, mirror that previous bearish mother candle right there. If you find longer ones, not too bad. You can copy that one. But me, I feel I would like to, I look at all this price action that has happened and has actually happened, the reversal have actually happened at the closing price of that ending of that candle. So, you know, for me personally, if I were to exit a sell, I can sell now, for example, but I'll exit at 96.10. Now the price is at 96.30. So, okay, you've got about 20 pips or less, about 15, 17 pips or so to take profit. So what I will then do is, firstly, if I were to look into selling, let's say, I will take profit at the 96.30. That was earlier on, was 96, yeah, 96.10, sorry, 96.10. But then, you know, measuring all the other areas, because you see, if I were to look at the average directional movement index, it is definitely giving me strength of the current trend, you see. So yeah, let's say I want to take this trade now. Okay, I will sell, and I know my so it's at 96.10 is my 0.9610. Okay, let's say 9650 is my stop loss, so 9660, let's say 1.9660. Okay, take profit 9610, 9660 stop loss, let's say, and I just want to experiment on this. Okay, look at that, and there you go. Okay, so this is we're looking at GBP NZD at the moment. Yeah, correct. So there you go. So this is on live account as well, guys. And there you go. Right, we are still. I've taken a one lot on that one, and I'll probably adjust my stop loss. You know, as it goes lower, I'll trail my stop loss closer to the break-even point as well. So let's see how that fares. Any question, guys? You guys are okay so far? So far, so good. So we've got a bit of a tip for you guys on GBP and NZD. Okay, we're looking into NZD crosses today. So if that is clear for you guys, of course, you know, you can always look into a shorter time frame, smaller number of pips, but then make sure you are looking at proper entries, exits. You can always tweak it using psychological levels as well. Now here on the 4-hour chart, there is a potential, let me just see. A potential Z-like pattern here, which actually means we've got an A to B right here. You double that one up. It has it has actually marked the exact area where it might reverse. Okay, so then if it were to reverse there, the fall of this lazy Z pattern, okay, could actually then be this area right here. So there is a potential for price from this moment here to actually fall if it's based on the 4-hour chart, you know, quite a bit, at least 200, almost 300 pips right there. Not almost, it's actually about 300 pips. So that's what it is signaling at this moment of time. We're using a bit of a pattern right there as well. This is a lazy Z pattern. The criteria is quite nicely met. Usually this goes double. So if I pull my Fibonacci, even from here, even the Fibonacci is 200% right there. And usually the fall is about 50% of the length of the body of the pattern. So if I pull that's 50% exactly there. So this is where I expect it to move, to come downwards too. But then we can always take it in stages and look for, you know, from this distance, the top to here, you can always look to the left and look for bearish candles, you know, per time. So any bearish single mother candles to actually trade it on to come downwards. Okay, so I didn't really see any bearish or bullish type, I would say bearish type ABCD coming down, but usually what happens is that in a Z-like pattern, the movement down will actually be in a shape of a ABCD to come down. So it wouldn't come down a straight line like this, it will come ABCD and come downwards. Okay, all right, guys. Yeah, that's basically it for the GBP and ZD. Any other questions, you guys? All okay so far? All good? Yeah. Okay, let's just check. Right, we have got AUD and ZD as well, looking quite bearish. This is something a little bit interesting because, you know, it's giving me a ABCD downwards, but then NZD should be weaker than AUD. AUD, you know, supposedly, even though bearish, should be slightly stronger than NZD, but that's why I wouldn't like to go into just a lower time frame because the data is not enough. But here itself on the daily chart for AUD and ZD, it is signaling a little bit of correction coming in. Okay, so you've got a higher high, higher low, but then as you go up here, you had higher high, higher low, and then suddenly it start to move to the downside, and that high there is looking a little bit lower than that high. So it has created a very strong resistant area in two peaks right here as well. And these are the area of quite strong resistance. And you can see that the strong resistance are at the 0.824, which is very close to 0.820 psychological level, and 1.0811, which is again very close to the 1.0820 psychological level. So you've got that resistant area based on the daily chart right there, just to give you an idea of prices may actually be sort of stuck with the resistance level right there. So again, if you look to the left, it's a really strong resistance level as well. Now, at this moment of time, on the to the downside, we're looking at depreciation of price for the AUD versus the NZD. Now the price is at 1.0768 roughly. Now it is actually moving downwards as well. It's created that wick at the very top, giving a signal to the downside. And if you look to the left, it's trading in onto a bearish single candle. So I want to mark this bearish candle where it closed. So then I know that the fall could be another 100 pips or so, possibly to the downside. If the bearishness continues, you are safer to actually exit before the closing of this price right there, which is at 0.662. So you can always, exit much sooner as well at 0.690 if you wanted to be very conservative, for example. Then your selling price can actually start selling already here, because it's under the 80 psychological level. It has already gone under the 80 and under the 70. So that is giving us a bit of a power of selling. But then, what we can also do is to always check again to see the strength of the trend. So you can always go onto the trend and you click on average directional movement index, and you want to look at the strength of the trend. Now, this is the catch. On the daily chart, the sort of the ADX is actually lower than a 25, but the ADX is showing the uptrend that is actually lower than the 25, because this is an uptrend that we are looking at on the daily chart. So if the daily chart uptrend is weak, that actually means that the downtrend is strong. Okay, so hence the reason it is making that a reversal at this moment of time. So if I look at this one here, that downward type movement, but then, overall is a trend to the upside. It is still strong right there. Let me see. Is it actually safe for us to actually sell at this moment? With what we actually see on the 1 hour chart, the answer to that is a possible yes to the downside, mainly because I've got this quite clear ABCD right here. Okay, it's giving me a potential to come down to this area of 0.751. So you can actually sort of exit at 0.760 at least, or 65, for example. Okay, but we are at 0.76970 already. So the how you call that, the potential is not that great in terms of number of pips that we can get. Okay, but here we can, draw a pattern, give you a bit of an idea. Hence the reason I like looking for bigger patterns on bigger time frames first, and then come down lower. Okay, because if not, then sometimes it's not just worth it to actually get the number of pips that are offered on a small pattern on smaller time frame. Okay, so here, for example, you can see you have got a lot of concentration of candles here as well, which is a good sign of where it could reverse. And the other thing is, you want to look at stochastics again. Stochastics is the divergence of stochastic. It usually is quite effective in giving you the idea of where price could potentially reverse, okay, or whether the reversal is coming up. As the most important thing. Okay, so here, for example, you got a high here, and then high, lower high basically, and still is a lower high, which is good. But then here, this area here, which is here, and the current price, which is here, This one here is the same level, but this one here is an upward slope. So that tells me that there may be a reversal very soon for the AUD NZD, especially on the 1 hour chart, because there's divergence. Okay, on the 4 hour chart, okay, on the 4 hour chart, it is almost the same. It's got divergence because you see that area there mirrors this area roughly. Okay, this area here, right here and here. Now we look at the high and you got a higher high. Then we look at this one here, same level. So this prices here, the upward slope did not match this horizontal slope. So there is a divergence and basically means even on the 4 hour, we may actually expect a reversal. Now, if you look into the price, 1.0768, if it comes down lower, it'll meet the 1.0750. So that 1.0750 may be a potential area where reversal could happen. Okay, there you go. All right, so that is where it is. So we have got that at the moment, and you know, previous resistance could be potential support. So that is another theory that we can actually follow through, but also with price action itself. If you were to actually sell at this moment of time, or you are selling, it's probably best for you to exit just before the 0750 area. Okay, so you've got another, let's say 10, 11, 12 pips or so, and I think probably best to just take another 10 pips or so, and you should then exit. Okay, so we can always monitor that in our next webinar to see whether or not that has actually played out well, like what we expected or not. Okay, all right, guys. We'll just monitor that. Let's see. It's looking not too bad on the bearish pattern itself. It has just crossed the B point area as well. It has actually gone down quite well. So perhaps it's got more room to the downside. But again, you know, you've got a bit of a threat as well in terms of a risk of a reversal at that 50 EMA as well. So yeah, it's a bit of a catchy situation, but you know, it depends on your risk level. If you're willing to take it, make sure you take it with less risk as well. Okay, not to get overly excited with a downward movement, especially because there are potential support just waiting for us at the D point area, especially, and also, you know, very close to the 50 EMA area. All right, see, okay. That area there has got support here. See, it mirrors all these areas as well. So want to be really careful. Okay, guys, any questions before we end the webinar for tonight? You guys got any questions? You guys been very quiet as well. All right, my GBP is still there. This one here, I'm not that interested with that trade at this moment of time. Okay, good. No questions. Sugu, all good with your Euro USD trade so far as well? Joseph, all good? Yes. All right, Peter, no problem. Okay, good, good. Glad that you guys are doing well. So I'm here to help at any moment of time, even if we don't have webinar, you guys can ask me questions directly or even in the group on Telegram. Okay, so no problems. We have got quite a number of trading opportunities until Friday. We have had many that has actually hit TPs as well, even for myself, lots of other students as well. So well done to you guys. And we want to grab more pips. Okay, we want to grab more pips so that we can tomorrow. So tomorrow, same time at 3 o'clock my time, 3 o'clock my time, 3 GMT plus 3. Okay, so 3 o'clock my time we'll have the webinar. Okay, I can do the 4 o'clock my time only on Mondays and Tuesdays. Okay, guys, no problem, Peter, anytime. So with that, I want to thank you guys, and we will meet again tomorrow, okay, at 3 o'clock Cyprus time. And I think this time around tomorrow, we will be talking about We'll be going into trading opportunities for Canadian currencies, Canadian crosses, okay? Because tomorrow we're expecting some Canadian data as well, especially Canada's GDP, as well as the industrial product price, raw material index, and all other things that are related to their not manufacturing, building manufacturing side of things, but most importantly, their economic status through their GDP. So it should be actually moving Canada a lot, but I'm also monitoring news on oil. So if there are some other inventories or announcement about oil that can actually then combined with its economic data releases, then we are getting more volatility. Now, volatility is the movements, okay, of all the price. If you get more volatility, you have got more trading opportunities as well. But if you have more trading opportunities, you also have risk. So that is why it is important for us tomorrow to look at trading opportunities involving Canadian crosses together tomorrow. Okay, all good? Okay, guys. So we will see you guys tomorrow, 3 o'clock Cyprus time, talking about CAD or Canadian crosses, and we look into trading opportunities for Canadian crosses. Okay, guys. With that, thank you very much. Have a very good evening to all of you, and we will see you guys tomorrow. Thank you. Bye-bye.